So this is just an unscripted update of my financial position as at the 27th of December 2021, the day after Boxing Day and 2 days after Christmas, obviously. So what you're seeing on the screen right now, it's basically just the after-tax income that flew into my bank account each of those weeks. So as you can see, one row has corporate and the other has retail, and then obviously the total is a combination of the two. Yeah, I get paid fortnightly from the corporate gig and weekly from the retail gig. So you'll see on the 29th of October, for that week, I had $764.21 come into my bank account. I can't remember why I got so much. I'm pretty sure there wasn't a public holiday of any kind during that time. I may have done... Oh, no, sorry, there was the Geelong Cup. That's right, that's why I got paid so much more than I normally do. And then you see things like on the 24th of November, that week, I only got $440. I was on annual leave for some of it, I believe. But then I'd put it through as personal leave, so I didn't actually get the penalty rate loadings that I normally do. I think I had one of the days off as opposed to both, which is why it wasn't a bit lower. But you get the gist of it. That's basically my cash flow from my jobs. Now, what you're seeing now, all these investments. So basically, this is the money I put into each investing platform during that week. So for example, the 29th of October, we can see I put $670 into eToro, 500 into Binance, and then obviously at the bottom it tallies them all up. So yeah, I haven't really put anything in the last 3 or so weeks because I don't like the volatility in the market. There are a lot of factors playing into, I guess, how uncertain the markets were. A lot of it was in anticipation for Jerome Powell's speech. Speech that he was set to do. I think he delivered it around the middle of December, and I knew it was coming up, so I didn't really want to touch the stock markets in case he had some bad news. The news wasn't too bad. Basically, all they said was we're going to reduce the amount of money we're pumping into the economy, and we're going to slowly increase interest rates, which is going to be a problem for next year. But the market breathed a sigh of relief as now we knew what was going on. But even after that, I was still a little bit unsure because of the new Omicron variant. So yeah, I still haven't put any in. But obviously I'll look to getting back into investing soon because, keeping your cash in low interest bank accounts isn't exactly the best situation either. So now what you're seeing is basically the current balance of each of the corresponding portfolios / accounts, or whatever you want to call them. BBL is Bendigo, WBC is Westpac, IGN is IGN, Rest Super is my superannuation fund, Vanguard, it's basically where I keep my Australian shares index fund. It's like the ASX 200. I've also got an Australian high growth fund in there as well, but I've only put 950 in that, and I think that's actually gone down from my initial investment. Their year-to-date return was 20% at the time of me investing, but I'm thinking that was probably because 2020 was a good year for obviously all the growth stocks because of the availability of money and the ease, how easy it was to just basically borrow money and how cheap it was. So all the high growth companies could just grow at an accelerated rate, whereas that's not really the case. Money's not as easily accessible in the current climate, but nonetheless, yeah, that's Vanguard. Spaceship they have 3, I guess, funds you can pick from. So that's the how that's been tracking for a while. As you can see, it's slowly gone down lately because a lot of their stocks are like, yeah, future growth stocks, which aren't really going too well at the moment. Link Market, that's just my employee share plan from Woolworths. So a bit of my pre-tax income gets taken out of my paycheck each week and it goes into buying shares, basically. Raise, you can only see up to the 29th of October, but I actually had a balance the months preceding this date. I just took it out because I only had $350 in it. And I had a custom portfolio that I was messing around with, but it wasn't really doing well. In fact, it was actually going down, and I was paying the $3.50 a month just to have an account that was losing money. And then if you work out the percentage of that $3.50 a month, I think it's about $42 a year. And you divide that by the 350, it's a pretty high like interest rate, I guess. So I was like, nope, I'm out. eToro is basically where I keep all my individual stocks that I just like. I'll go over those in another video. But yeah, I like to have a bit of fun with this stuff. If it was all about just purely making money, then I was probably better off putting everything in Spaceship and Vanguard. Because, you know, the whole index fund, mutual fund type thing, diversify your portfolio and whatnot. But yeah, I put a decent chunk into eToro just because, yeah, I want to have some fun. And those stocks aren't doing too bad. They were pretty wrecked 2 weeks ago, but yeah, they're all right now. Binance is my main crypto platform. It's quite secure. A bit of a pain in the ass to set up, but once you've set it up, yeah, pretty secure. A lot of coins to choose from. So as you can see, that's fluctuated quite a bit. Yeah, quite a bit over the last few months. SwiftX. Now, SwiftX, I signed up to that months after Binance just because I think SwiftX had a couple of coins that I couldn't actually find on Binance. And then I figured I'd just jump into SwiftX just to see what they've got. I haven't really put much into it for a while. It's kind of a set it and forget it type thing. Coinbase, I had that back in 2017 and I haven't really touched it since, but I like to just sort of plug in the numbers there just to see. Well, I mean, technically I do own that money. I haven't really, obviously haven't really touched it, but yeah, it's still part of my net wealth, I guess. That basically just has a small amount of Ethereum, Bitcoin, and Litecoin. Obviously, if I'd have started dollar cost averaging in 2017, I would have been in a much better position now. But yeah, obviously I kind of just didn't believe in it at the time. So kicking myself for that now. And Sportsbet and Ladbrokes. So I primarily use Sportsbet just because they offer the live handicap, live betting, and I usually use live handicap bettings if I have time at work and if I see something I like. Something I haven't really looked at lately, but there were some pretty good deals. Like I picked one months ago. In the fourth quarter, Lakers were down by a little bit, but I had a weird hunch that they were going to win. So then I put a live bet on them at $10 odds to win, put $10 on it. They won, made 100 off that. So that was a quick little 10x return. So yeah, that's crypto-esque gains. And Ladbrokes, they offer a lot of promotions, but they tend to like call you and text you about it. I don't think in Australia they're legally allowed to advertise that kind of stuff anymore. Like I think Sportsbet's really pushing it as it is with their TV campaign ads. So yeah, I mean, I've had Ladbrokes for years and years. I haven't really been gambling the last several years, to be honest, but I just picked up again because earlier this year I had a lot of spare cash. Now I'm a bit more careful with this real estate investment coming up, which is what you're seeing on this screen now. So As you can see, one row's got cash, so that's basically the sum of all the money in my bank accounts, all 3 of them. I have another video on why I have 3 bank accounts despite the garbage interest rates. I think the card will be on the screen about now. Stocks and crypto, that's obviously the balance of all my stocks and crypto amounts. Obviously I didn't include super. It is there as an option, as an absolute last resort, but I don't think banks look favorably on that if you had to withdraw super to pay for a loan deposit. So yeah, we're not really going to touch that or count that. And then liquid balance, it's the sum of the cash and stocks, because I could turn around like right now, liquidate everything in the portfolio. All the crypto would probably come into my bank account in 10 seconds. Stocks might take a few days. I know I think Vanguard would take the longest, but that's good. It's secure. Remaining for land/house, so you can see the land/house deposit. I need $98,750 according to my calculation. It was 110,000, but that was sort of I guess at the time. But then since then I paid $15,250 as a 5% deposit for my land, and another 1,000 on top of that, but I paid that months ago. So that might be, when you saw on the previous screen, you probably saw the bank balance had gone down a fair amount. That's what that was. So yeah, now according to my calculations, I owe I'm gonna need $98,750. And then that remaining for land/house, obviously that's the land deposit, take away my current liquid balance. As you can see, from the 19th of December to the 27th, it looks like I technically made like $4,000. I think that was just the stocks in the crypto market jumping back up again. So in fact, if you look on the 4th of November, I only had 47,000 according to my calculations, but that was a bit out, and I think stocks and crypto were a bit healthier back then too. The average savings per month, what that is, that's basically if I needed the real estate investment amount, like that 20% for my land and my house, the remaining amount that I require to put 20% down in total on my land and my house. If I need that 15 months from now, I will need to save $3,362.93 a week. And the average savings per week, $3,362.93 per month. And then the average savings per week would be $840.73 as of today. But that, yeah, it fluctuates a lot, especially since I've got like a decent chunk of it in stocks and crypto. I was quite freaked out about this earlier, but I'm pretty sure I can delay the building of the house. So I'm not too worried about the other amount I need for my land. In fact, I probably have that amount right now, and the land's not even going to be ready for at least 12 months yet. And yeah, I can delay the house. I think, well, I've got 1 year. I'm told I can have 2, but in other estates, from what I've heard from my friends, is that when they bought their land at the same time the rest of the estate did, they've already built their house, but there are some blocks of land that don't even have a house starting to be developed on it yet. So I don't know if they can actually do anything about that. But the point is, I can delay the house if I need, which will give me more time to save up for it. But obviously, in this economy, it looks like the prices of labor and materials for building a house are going to just drastically outpace what I can save for. So I might want to just do it ASAP anyway. I could probably outsave the amount I need for the 20% deposit, if that makes sense. Like, if the price, for example, if it's going to cost me $300,000 to build a house at the end of 2023, and then at the end of 2024 it costs me $350,000 to build the house, well, that's an entire year of savings. But if I only needed 20% deposit on that, then I'd only need an extra 10 grand. if that makes sense. Hopefully it does. But yeah, anyway, that's the current update of my financial position as at 27th of December 2021. And we'll see where we go from here.